Okay, and welcome back, students who are taking financial accounting, and we're working on the chapter 4 short exercises. And in the last video we had stopped on 4-11, so I'm going to pick up with 4-12. And even though 4-11 was just about the income statement, I realized that there's a few new concepts that were applied in that particular problem. So you might want to go back and watch that. And if you have any questions, feel free to contact an instructor. In this problem here for 4-12, it says it wants us to prepare a classified balance sheet and use the report format. Now, it says prepare the classified balance sheet, right? What's classified, right? Classified means what's classified? Well, when you create it, you have your financial statements, your income statement, your balance sheet, whatever have you, and as long as they stay within the business, okay, then they could be as right as you want and they could be as wrong as you want. Okay, I mean, you're making your financial decisions based upon that report card, and if your report card's wrong, you're going to make wrong decisions. But as long as it stays within the business, that's up to you. But when those financial statements now have to leave the business, okay, they absolutely must be correct, and that's why they're called classified. All right. So classified means that this is 100% correct, because now your investors, your bankers, right, vendors, etc. They're going to be making financial decisions based upon your information. So classified means absolutely correct. All right. The other aspect of this here is it says going to use the report format. Right? If you've watched the other videos from chapter 2 and 3 and seen other financial statements, you saw that when you're creating the balance sheet, assets would be on the left here, then liabilities and equity would be on the right here, okay, and then you have your total liabilities plus equity, right? Okay, so equity. So it's sort of like assets on the left, liabilities and equity on the right. Well, with the report format, what we're going to do is we're going to go down the page. So instead of going horizontally across the page, right, which is what we're doing here, which is what we are doing here, we're going horizontally across the page. When we're doing the report format, we're going to go vertically down the page. So we have our assets, then we list our liabilities, and then we list our equity in this fashion. Okay, so that's what the report format is. Now realize that if you are asked to produce a report format and you show up in the other format, then you will get things wrong because it's not in the correct format. On the test you'll lose points because you're not creating the financial statements the way it's required. I mean, if I have business A who was doing it horizontally, okay, and business B who's doing it vertically, right? Well, when you're working for business B, you're going to continue to do it vertically, okay? You're not going to, all of a sudden change to horizontal. It's because that's the way that business wants to view the information, and vice versa. If you're in business A and you're doing it horizontally, you don't just automatically start changing to the report format in vertical just because, okay? And so when you're taking a test, if you're asked for the report format going vertically and you do it horizontally like this, okay, you're going to lose points because that's not how it's wanted. It's just that simple. Even though this information might be 100% correct, you're going to lose points because it's not what's being asked. Just like in the workplace, they ask you for something, that's what you produce. You don't produce whatever you feel like. Okay? All right, so report format. Let's get to a blank slide here. Oh, and it says here, we're going to use the same information from, the previous problem from 4-11, okay? And but this here shouldn't be, you know, and it shouldn't be as bad, but I still don't agree with the way they produced this information, all right, on the balance sheet. So we have the heading, right, balance sheet, and then it's as of January 31, 2014. So then I'm going to have assets, and I'm going to put my liabilities, and I'm going to put my equity, stockholders equity, okay? Right, so in this, since our information here, you know, they're changing the format a little, the way things were being done. Remember, before we would list, you know, we would list our cash, accounts receivable, inventory, prepaid rent, okay, and we would then also put our equipment, um, and do we have a building in this one? Okay, no, that was the other problem. Okay, so then we have equipment, and we would then have less accumulated depreciation equipment. Okay, we would normally have our cash, which would be 2750, and accounts receivable 3100, and then 4700 and 1200 for the prepaid rent, and then we would normally have our equipment. Okay, you know, here would be our what we purchased the equipment for less our accumulated depreciation, and we'd have an underline, and we'd put here as our book value, which in this case here would be 25,700, right? And that would give us our total assets. But you know, that's the way the information was presented in chapters 2 and 3, okay? But they've changed this a little bit here, okay? And I can't, you know, I'm not going to disagree with the way they changed it, in that now they've gone and said, okay, you know, what we want to do is we want to segregate our total, our current assets. So we'll have current assets here as a heading. And then this would be my total current assets. But notice that they're putting it all in one column, okay? Whereas multi-step, it should be in a second column here, right? So I disagree with that. But in any case, I have my total current assets, and then they're also calling it long-term assets here in the solution, okay? Long-term assets. We don't use the terminology long-term assets. This is called property, plant, and equipment. And the shortcut for that is PPE, okay? So when we talk about property, plant, and equipment, you'll often see, instead of always writing that out because it takes long, they'll just write PPE, okay? So the heading here should be PPE, and then I would, here's where I would put my equipment, less, you know, the accumulated depreciation equipment. And of course I'd have that amount here, less the depreciation, which would then give me my 25,700 here, and of course that would then give me my total assets, which would be the 37,450. And notice that it is double underlined because that's the end of a calculation. Okay, so even though they're calling it long-term assets and they don't actually have the breakdown of the equipment and the accumulated depreciation, they're kind of like just saying, okay, we're going to just make this equipment net. But I would, equipment net. Okay, so I would actually have broken that down and had it in the separate columns, right? All right, so now we move on to, I'm going to need a new slide in here. So let me stick in a new slide. Home, insert a new slide. Okay, so I'm sticking in a new slide just because I don't have enough space, and I'm going to continue to work on down the page. Okay, so then I have my liabilities, right, and they're breaking it down to current and long term, okay, which is just fine. And so I have accounts payable, salaries payable, and accrued liabilities. Right, so I end up with a $sign because it's the first number in this part of the calculation, and the accrued liabilities is 2,475. Right, so this is going to give me a total current liability of 8,425. Okay, now notice they have it all in one column. I don't agree with that. Okay, again, multi-step mathematical, right? So I'm going to do math, and I'm going to put the 4,800 here, the 1,150 here, and the 2,475 here, which will then give me 8,425 here, okay, because of the mathematical calculation. Then I have my long-term liability, and I agree with this heading, right? And I have notes payable long-term. All right, and that's, I have to move everything over one more column here. Sorry about this. Okay, so now I'm at 3 columns, 4,800, 1,150, and 2,475, which would then give me my total current liability of 8,425, and then I have a long-term liability of 23,000, and that would give me my total liabilities here of 31,425. Okay, then we move down to our equity. Okay, that's stockholders equity, and since we only have a total stockholders equity count, that would go here for 6,025, and of course this is going to be my total liability and stockholders equity, which would give me the same amount as my total assets, 7,450, and double underline there because it's the end of a calculation. Okay, all right, so I'm going to bounce back and forth between the pages here and just recap it real quick here. Okay, it's telling me to prepare a classified balance sheet, so that means the information has to be absolutely correct, and it's telling me to use a report format going down the page. Okay, and we're using this information right here, right? So we have to look at our assets, liability, and our equity accounts. So I have cash as an asset, accounts payable liability, total stockholders equity is 6,025. And again, this here in this total stockholders equity, I wouldn't agree with that. I would have common stock less retained earnings in order to end up with, so I'd have that in that column. Okay, come on, Jim. I would have common stock, retained earnings, underline, and then I'd have the math for my total stockholders equity. I wouldn't have just this one account, so that would be in that section. So maybe I didn't make that clear enough because I just went over it real quick. So let me stick it in there. So I would normally have the common stock, and I'd have retained earnings in here. And then I have total stockholders equity. And again, that would be here with this number, here with this number, and then I have the math doing that third line item there. But because we only have just the one account there, and they're calling it total stockholders equity, it's listed there. Okay, but anyway, so there's my equity account, long-term notes payable, salaries payable, accrued liability. Okay, those are my balance sheet accounts. So when I'm creating my balance sheet, the heading has to be correct, and then I'm doing everything straight down the page, right? I'm doing it down. I'm not doing it horizontal. And when I'm going straight down the page, again, I'm not agreeing with the solution. So you're seeing how I would do it. So I would have assets, and I'd list my current assets, and it's fine to segregate current assets from long-term, but when we're calling them long-term, we actually call it property, plant, equipment. And instead of just having the equipment net, I'd have equipment less cost, less accumulated depreciation to give me my net. Okay, but I'm using the information that's there. Just realize that I would deviate if I had all the proper information, right? I'd have equipment less accumulated depreciation, equipment, right, would be here, and then I'd have the net amount there. Okay, and of course that allows me to have my total assets because I'm adding up my current plus my property, plant, and equipment to get 37,450. And the same thing when I come down here. And now remember, this is an extension of the page. If I actually had to use, and the thought just occurred to me, if I actually had to use a different page, I would actually list it as page 1 of 2. And when I come down here, I'd actually put in the heading again here, right? And I'd list this as page 2 of 2. Okay. So for my liabilities, if I can choose to break it down as current, long term. All right. Generally, if you break down your assets to current and property, plant, and equipment, you generally do the same thing with your liabilities to keep it standard. But do you actually have to do it? No. If I only had an accounts payable account, I wouldn't need to break down current and long term. All right. So it's just a matter of common sense. But if you have long term in with your liabilities, in other words, you had like a mortgage payable along with your accounts payable, well then yeah, you'd end up breaking down the current portion of that mortgage payable, and you'd have the two sections, current liabilities and long term. Okay, so they're listing here the current liabilities, and then the long-term liabilities. And notice I had 3 columns. I had to redo it 3 times in order to make sure I put them in the right column multi-step. So I end up with a total liability here, right? Then I have my stockholders equity. And again, the stockholders equity, I would have common stock and retained earnings. So I'd have those amounts here. And then that math would give me my total stockholders equity. And so that in this column here, I have my liabilities plus my stockholders equity. in order to get my total liability and stockholders equity. Okay. All right, so I hope you understood that. As I'm thinking it through as to what I was saying, I pretty much covered everything, but if you have any questions, it's one thing about the theory. Remember, the theory aspect of it is, come on, pen, you know, what accounts you're using, all right? The theory aspect of it is multi-step, okay? The application, well, you just saw me just building it, okay? So if you're you're watching me apply the information and you're not understanding why I would be using, 2 columns for math and things like this, like right here, okay, then that's a theory thing, and go back and watch the theory videos. But if you understood that what multi-step is, and to be using which columns, but you're just a little confused on the actual application of it, like I'm doing over here, what goes in what column, that's an application kind of thing, all right? But if you don't understand what multi-step is versus single step, that's a whole other ball of wax. But in any case, if you have any questions, definitely feel free to telephone and speak with an instructor. Okay. So only one more problem for this short exercises, and we'll be done with the videos for this series. All right. See you then.